This is Anchor Your Retirement with Barb Gulin from Safe Harbor Financial Planning Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Barb Gulin provides her clients and prospects the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful strategies to put you on the path to achieving your retirement goals. And now here is Anchor Your Retirement with Barb Gulin.
Welcome to the Anchor Your Retirement podcast. I'm your host, Barbara Gulin, and with me today is my co-host, Tony Shore. Hey, Tony, how you doing?
Hey, Barbara, I'm doing great today. I've had a good week, and I'm excited about today's show because you have a topic I have a lot of questions about. So this is gonna be a good one. But yeah, I've had a great week. I'm trying to get out as much as possible and enjoy the summer as much as possible. But spending time with the family, you know how it goes, keeping busy. How about you?
Yeah, it's been a busy week for us too. But before we get started, I have a really corny joke for you.
Here we go.
How do you catch a unique rabbit?
I don't know.
Unique up on it.
Oh, now, Barb, you're telling bad dad jokes. That's my job. You're stealing my thunder.
How do you catch a tame rabbit?
I don't know.
Tame way.
I love it. You're stealing my thunder.
That is one of my favorite jokes.
Oh, I've heard now that you say it, it's been a while, but I heard the unique up on it before. I'd forgotten, though, so you got me. But I've never heard the tame way ending to it. I love that. Yeah, you added a new twist that I'll have to use. Yeah.
There we go.
I'll annoy my family with that one now. Thank you for that.
All right. They can blame me.
Yeah, I'm sure our listeners appreciate that too. I love it. Well, Barb, that's a good way to start the show right there. A couple of bad dad jokes.
You know, we're talking about what can be a heavy topic, so let's start in with a little levity. Okay.
True.
Here's my next question for you. What's something that nobody thinks about until they absolutely need it?
I don't know.
Life insurance.
Life insurance. Yes, that's true. Nobody wants to think about that, about the end of their life or what's going to happen after they're gone or needing to insure things. That's something people put off, isn't it?
It is. But, you know, the funny thing is that our population has a 100% mortality rate.
Yeah. Yeah, that's true. That is 100% true. Yes. It's going to happen to all of us. I keep trying to convince people that I'm not aging and that's not going to happen to me. But my family tells me different.
I'm trying to figure out how everybody else I went to high school with has their 35th reunion this year, because it sure doesn't feel like I should be having one.
Right? Yeah. Mine's even a few years over that, and so I'm not looking forward to that. Yeah. I don't want.
Well, your secret's safe with me.
Yeah, good. Yeah, just between you and I. So, you and I and the fence posts, right? So.
Yep.
So the topic today, tell us about that.
This type of life insurance I want to talk about today is something that's called indexed universal life insurance. And while there are other nationally recognized talk show hosts out there that are advocates for term insurance, and they may even say that there's no place in a financial plan for a permanent type of insurance like indexed universal life, I would beg to differ. And I think that when you're looking at it as a tool, it can really be a multifaceted component to your financial plan. We can accomplish several different things with this one particular tool and make good use of your money on a number of levels.
Wow. Okay. So I think that's really it sounds interesting and it sounds good. Obviously, there's a reason you picked this particular type of life insurance to talk about today, right?
Yeah. I mean, I really like life insurance. Okay. I think that when it's used properly and integrated into your
Yes.
financial plan, where you've got a purpose for it. You know, you don't just buy life insurance because you say, hey, I want life insurance. And most insurance companies at some point are going to say that you have to quantify, you have to tell them what the need is, especially if you're getting a bigger death benefit. Okay, a 22-year-old college kid who just graduated, who isn't married and has no debt and no obligations at all, probably isn't going to be able to walk in and get $1 million life insurance policy.
No, and why would he, right?
Exactly.
So why would they? Why would they? So why should I consider indexed universal life insurance then?
Well, I like it for a number of reasons. Number one, you're going to be able to build a cash value in it that when you need money, you can borrow against it, and that money is going to come to you tax-free.
Okay, that's good. I like the sound of tax-free.
Right, because the IRS doesn't consider it income because technically on the books it's a loan. You have the option whether or not you're going to pay it back, and depending on where you are in life, you might want to pay back that cash value so that it continues to grow so that you have that money later on once you retire. But once you retire, we might use that to help give you a buffer for income in retirement, knowing that you're probably not going to pay it back. It'll drop the death benefit a little bit, but when we're using it for this purpose in a financial plan, we're not building this for the big death benefit necessarily. We're building it for you to have that bucket of money to access.
Ah, okay. So I like that. So this is like a cash value policy where it can actually help you get some revenue or income in retirement then.
Absolutely. Absolutely. And in the unfortunate event that maybe you pass away sooner than you're planning on, if you've got a lot of money sitting in those qualified accounts, okay, your 401k, your IRA, anything that you haven't paid taxes on yet, the Secure Act and Secure 2.0 established a rule where if you're not the spouse as a beneficiary, so if it's a child, if it's a grandchild, if it's a niece, a nephew, anybody that you're not married to, that person, as long as they're over 18, has 10 years to liquidate that account and take out the money and pay taxes on it.
Got it. So, it can help you. It sounds like it's a huge tax benefit then.
It is because that death benefit, if you die too soon, is going to come to that beneficiary tax-free and help offset some of those taxes that you would have to pay on that qualified money that's coming out.
Yeah.
You know, fun fact, most of us end up losing our parents when we're in our 50s and 60s. And fun fact, our peak earning years in our careers are usually in our 50s and 60s.
Yeah.
So you really end up, you can push somebody up a tax bracket without even blinking.
Yeah.
If there's a substantial inheritance there.
Right. And I love the fact, Barb, that you look out for your clients' best interests and try to help them minimize their tax burden. And you're looking ahead because most tax professionals, you know, people look at last year's taxes or what do I need to do before April? But you're saying, hey, look at your situation down the road, and this can help with that. I like that. And people underestimate taxes that they could end up with in retirement, don't they?
They do. And, you know, I'm not an accountant. I certainly don't play one on TV, but I sure do like to look at some of this generationally, because I really can't think of a parent that is sitting there going, yeah, I want to make sure that my kids have to pay a boatload of taxes on my stuff after I die.
Right. You don't want to leave your loved ones in a bad situation or with a huge tax burden either. So, and that's where this comes in, universal, index universal life. So, are there risks with life insurance, and how can I avoid them?
Well, you know, index universal life is going to be one of the safer options for life insurance.
Sure.
Much like other indexed products that are out there, you're going to get to participate in the gains of the market or in a market index. And that's how they're going to credit the interest to your account based on the premium and how it's growing. When we have a year like we had last year where we went backward, the account isn't going to decline in value except for the cost of insurance that the insurance company is going to take out.
Sure.
And mostly when we're designing plans for people to use in retirement or later on in life, we're going to front load most of those costs in the first few years that you're paying into a policy.
Okay.
And if you think about it, it's only fair. That's when the insurance company is taking the biggest risk.
Sure.
You're paying them $10,000, $15,000 for a premium that pays a death benefit of, for example, $250,000 or $300,000. They're on the hook the minute you pay that premium. If you're in a car accident right after you pay it, they've gotten $10,000 and they're paying your beneficiary $250,000.
Yeah. Yeah, that makes sense. So you do have to look at all the aspects. It sounds like something that you want to work with a financial advisor who's going to be looking out for your best interests, right? A financial services professional like yourself. You really
need somebody who understands what's going on and who understands how life insurance works.
Yeah.
I have a great team that I work with at Gradient, and I have been just blessed to really work with some great people in the industry who taught me how to make this work. And now I consider it really a privilege to be able to help other people figure it out.
Yeah.
Because guess what else we can do with indexed universal life?
What's that?
We can usually, if somebody's in decent health when we're going into it, you're also going to get some long-term care coverage associated with it.
Well, that's another huge benefit. And long-term care has been such a burden, and more. I mean, they say basically 2 out of every 3 people will need long-term care, and it's so expensive. My own mother is in long-term care now because she has Parkinson's, and it's outrageous. I mean, the cheap end, it's like $6,000 a month, and on the other end, it's $12,000-$13,000 a month. How are you gonna, you're gonna need some help with that.
Especially if you live in a larger city or you're in a situation where you are, memory care is extremely expensive.
Yeah.
And, my hope for all of my clients is that they just fall asleep one night and don't wake up the next morning.
Yeah.
And if that's what happens with a traditional long-term care insurance policy, you've basically lit a match to the money.
Yeah.
And, right now, I work with a lot of federal employees. The federal government's long-term care insurance program is on hold right now, where they aren't accepting any new enrollees for a little over a year.
Wow.
Moving forward, just to try to stabilize what was going on.
Yeah. And like you said, traditional long-term care insurance, if you end up not needing it or passing away before you use it, all that money that you put into that insurance policy, that's just gone.
It is.
So you're not ever going to see that money again. And that's where you say index universal life insurance may be a better option, right?
Right, because you've got a death benefit associated with it.
Right.
Even if you never use the long-term care provision, or if you use it for a while, there's still going to be a death benefit there.
Sure. So why haven't I heard about indexed universal life more?
Indexed universal life has really only been around since 1997.
Oh, okay.
So in terms of insurance products, it's a relatively new insurance product on the block. Interestingly, if you do a search online and you Google like the rich man's Roth IRA, indexed universal life is going to come up. It doesn't have the same income restrictions that a Roth IRA does.
But it gives you those tax-free benefits, right?
Right.
Yeah.
And it doesn't have the same contribution limits that a Roth IRA does.
Sure.
I have clients that have policies where, because we're trying to prepay taxes for them while we're in this lower tax bracket, they are putting $20, $30, $40,000 a year into these policies.
Wow.
You can't do that with a Roth IRA.
No, you absolutely cannot. So it's a relatively new product, unlike a lot of investment vehicles and retirement vehicles and insurance products that have been around for a long, long time. And they keep improving these products. Insurance companies try to be they're more and more competitive, and it seems like they add more and more benefits for the consumer. As they see needs arise, they want the money to flow through. So to get people's money, they have to up the benefits. I've seen the same thing with fixed index annuities. I mean, those things, they've got them down to where there's no fees and higher interest rates and principal protection. So there's different vehicles out there that people can use like this. And I'm glad we're learning about Index Universal Life today. Are there any guarantees with Index Universal Life?
Well, you're going to be locking in that death benefit.
Sure.
And with some policies, your death benefit is increasing while you're paying the premium in. Okay, while you're paying it in, a lot of times that death benefit is going to go up. Now, it's going to go down when you start taking money out. It's going to go down if you need to use the long-term care coverage.
Yeah.
But that death benefit is never going to go away. And unlike whole life insurance, which is another type of permanent insurance, whole life is going to pay you 2 to 4% a year. Okay. That is going to be guaranteed. In indexed universal life, depending on the company that you use, the index that you use to credit it with, you could make 7, 8, 9% a year. And now, now there could be years where you make 0, like when the market goes backward, like it did last year.
Sure, 2022, yeah.
Right, but overall, you're going to have an opportunity to build a bigger tax-free bucket.
Yeah. Sure.
With an IUL. Yeah.
Sure. And the claims, and it depends on your situation on whether or not it works for you. Now, how does an IUL, as we're calling it, an Index Universal Life Policy, work with my overall financial plan and retirement income plan?
Well, for people who are thinking about retiring before 59 and a half, and there are younger people out there that are thinking they don't want to be in the same career path that they've seen their parents and grandparents in. We can pull money out of an IUL before 59 and a half if they need that to supplement their cash flow. It's also going to give you another one of those safe buckets of money that we talk about, where even though you're participating in how a market index performs, your money isn't directly invested in the market. So you're not going to have the ups and downs like you will in a brokerage account or in something that is invested in exchange traded funds or stocks or some sort of portfolio like that. Sure. It's really going to help balance out your risk and still give you a really nice growth opportunity.
Yeah. So like last year, if you had an Index Universal Life Insurance policy and it's the growth is tied to, let's say, the S&P 500, and the S&P went down 20%, your balance didn't go down 20% in the life insurance.
No, you had 0 gain, obviously, if you were involved in the S&P. Well, but the only money that they would have pulled out would have been any insurance cost that you signed a contract that you agreed to them taking out. And that's the other thing to know, is that this is a contract. It's not a guess. It's not a portfolio.
Going in other words, going in exactly what's going to happen, basically.
Yeah. You know that you can make up to this amount. And if it's a wonky year in the market, you might walk out of there with 0, but 0 sure sounded a whole lot better than minus 20 last year.
0 is your hero in down years, right?
Sure is.
Yeah, exactly. How would you like to not lose in your investments in a year where there's a 20% drop? I know that. I know I would like to be in that boat.
That would make people happy for sure.
All right. So if people have questions about IUL, about what we're talking about today, this type of insurance or other types or their investments in general, I know that you would be more than happy to talk to them about this and see if it fits with their situation. I know that you only look at things that are going to benefit where they're at and what their goals are. So in order to meet their goals, if this is something that would help them do that, you'll recommend it and explain how it works. But if they have questions, how can they get a hold of you?
Absolutely. They can always reach out to us at anchoryourretirement.com, or you can always call our office at 913-553-6222. Because the nice part about this is you can not only use this if you're getting closer to retirement or think that you're going to retire, but there are a lot of younger people out there who could start putting smaller amounts in now and start growing that tax-free bucket for later on in life. You know, Einstein's eighth wonder of the world was compound interest.
Yeah.
So the sooner you start putting money in this now, the better off you're going to be in the future. In fact, I even have clients who started these policies for their kids, and their kids are still in diapers.
Wow.
But you know what? When it comes time to buy a car, they can borrow from themselves against this life insurance policy. Probably a better way to teach your kid how to manage money, where you're borrowing from that instead of the bank. If they make a mistake and they're late on a monthly payment to pay back that loan, it's not going to mess up their credit, but it's going to teach them a little bit how to be responsible with money.
Yeah.
And with the parent owning the insurance policy, unlike a UGMA or a UTMA account, you know, with UGMA and UTMA, Universal Gift to Minors, Universal Transfer to Minors account, once that minor reaches age 18 or 21, depending on what state you live in, that money's theirs, and there's nothing you can do to stop them with what they want to do with it.
Yeah. So if you have a family, the more you talk about Index Universal Life, the more I think, boy, if you have a family, no matter what age you're at, this might be a good thing to have.
It really can be. It's so multifaceted and can do so many different things. And you know, it's great to know that you've got a bucket of money you can borrow against if you get in a jam where you're not beholden to the bank or your credit score to be able to access it.
Yeah. Yep, exactly. Well, Barb, great topic. I'm sure our listeners, there's a lot to these, and I'm sure our listeners have a lot of questions. And I know that they might want to say, hey, what can it do for me? What are the costs? How do I get into something like this? So once again, before we go, let our listeners know how they can get a hold of you.
All right. The website is anchoryourretirement.com. And our phone number is 913-553-6222. And trust me, Tony, we'll be talking about this again because there's way more to life insurance than we can cover in a short podcast like this. Oh,
sure. And there are many types. So we should probably do a show on various types of life insurance and what situations each one is for. We could probably do a 4-part series on that. Oh
my gosh, at least, yes.
So, well, great show today, though, and a good introduction to the Index Universal Life Insurance. Sounds like a really great financial tool for our listeners out there. And Barb, I know, once again, you love to hear from our listeners if they have a topic they want us to discuss, a financial situation they want answers about. All they have to do is give you a call. Give that number one more time.
All right. It's area code 913-553-6222.
All right. Well, Barb, great show today. I really enjoyed it. Yeah. And again, what's that website one more time?
It's anchoryourretirement.com.
Exactly. And that's the name of the show. Thanks for tuning in, folks, to anchoryourretirement.com.
Thank you for listening to Anchor Your Retirement. Don't pay too much for taxes or retire without a sound retirement plan. For more information, please contact Barb Gulin at Safe Harbor Financial Planning Group. Call 913-553 888-6222 or visit them online at anchoryourretirement.com.
Advisory services are offered through Safe Harbor Financial Planning Group, LLC, a registered investment advisor in the state of Kansas. All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.